Enter the bitter boomers here to say, we got Charlie Gasparino, we got Steve Leeb, we got Charlie Brady, and we got Liz MacDonald. What do you think of that? They missed the whole thing and they want in.
Are we really going to slam the poor millennials?
No, I love them.
Why? Why
beat them to the wolves?
Yeah. They have a lot of debt. They have a lot of college debt.
Yes, you're exactly right.
Yeah,
I think they should get in as soon as they can.
Yeah, they went to all these private schools, you know, taking fine arts. And then they wonder why they get jobs as baristas at Starbucks.
But they really don't.
They really don't.
They don't get baristas.
You know, they don't have any contact, any human contact. I mean, everything is done on Facebook, and they don't really appreciate, you know, what's going on in the country.
I know, they don't.
And I mean,
it's all social media to them.
It is social media, and the problem with social media is that they live in these very cloistered little circles, and they only hear what their friends are doing.
They're not cloistered enough to pay attention to this rally chart. Let's say they did get involved in the market now. You could make the argument. We just had a guest here earlier saying, you know, I see Dow 30,000 this year. So you could make the argument, yeah, you're a little late to the party, but the party roars on.
Well, you know, yeah, John Tabacco said that. And, you know, to his point, you know, the Dow rallied 25% last year. To hit 30,000 would be just a 20% rally this year. So is it possible?
Doable.
Absolutely
so
possible.
Join that party.
Especially with earnings growing and multiple.
So these young people are not so stupid, are they?
Earnings growing.
No.
And the thing is, Neil, there used to be, and maybe dating myself as a bitter boomer.
You should be allowed to date whoever you want. That's an old Dick Cavett joke. Sorry.
Well, no. There used to be a simple rule. PE plus inflation, 20, and that's when
price
the market,
earnings multiple plus inflation.
Right. So earnings today, forward earnings today are about 18. Inflation is about 2. The market's not that overvalued.
What about the NASDAQ? It's trading at 28, almost 30 times.
But
is that a little too
high? That's where the earnings growth is right now.
And so you see that as justified even at the new math of the.
The tech sector was the big winner last year. That's continuing this year.
Look, and the reason why
it's centered in 5 stocks, though.
It is. Yeah, those 5 stocks have $3.5 trillion market cap.
But remember, Amazon doesn't
2.8. But yeah,
I might be wrong about this, but I don't think Amazon trades on earnings necessarily.
No, but they do start. But wait a second. Amazon
not that good.
No, they weren't that good.
Which
but
is why millennials are anxious.
Amazon has a solid free cash flow. They have money at the end of the day, and Facebook has a fair amount of money at the end of the day. Google has a lot of money at the end of the day.
Amazon is the most profitable nonprofit. It doesn't have a bottom line at the end of the day, right?
Right. It doesn't have a real bottom line, but it does have cash. Lizzie, it has a lot of cash.
The one thing I would say about the NASDAQ
you
index.
Just touch, Steve.
I like touching it.
All right.
His manly shoulders. But the one thing you have to say about Amazon, and it's a market bias towards this company. This company does not outperform in any traditional sense of the term, and the traders and investors give it a lot of credit.
But besides that,
but if they my point. Suppose they stopped giving Amazon that much credit for underperformance.
Then it could turn.
Well, then
by the way, maybe we should give millennials more credit and more leeway then.
Why?
Thank you.
You're welcome. Bringing it back to the topic.
On Amazon, but one thing,
please don't mention Amazon again.
Okay, I won't. But I will say some of these companies could be in trouble. Okay, I did say some of these companies.
Could I switch gears a little bit?
Yes.
You guys
okay.
And Lizzie, I'll raise this with you.
Oh, okay.
First off, the president getting no mention of this. Now, the fact is, if you read all the papers today, Dow 25,000 was prominently mentioned. I don't dismiss that. But much more mentioned is this, Michael Wolff book. And that the president has this uncanny knack when good news comes, even with the passage of the tax cut. What do we hear that day? Mark Warner on the floor of the United States Senate saying you better not fire Bob Mueller. And the networks were wall-to-wall on that. My only point is the president steps on his message too many times. But do you think he gets a fair shake for the markets and or the economy?
No, and here's the problem. The president has made in a very unfortunate way, these tweets and a lot of rhetoric where he's shot off his own feet. Yeah. He's hurt himself. There's an emotional reaction going on now in the D.C. Beltway, the media Beltway. And Charlie and all of us trained journalists, when we were at the Wall Street Journal, we were taught if you get emotionally involved in a story, you get immediately hooked and removed from that story because you're going to blind yourself to the facts. So yesterday you have the presser, right? You have 25K on the Dow. You had 19 questions questions about Steve Bannon, 0 about the record run in the Dow, 0 about the economic mini boom that's going on right now, possibly taking off.
And I feel that could be a legitimate story.
Yeah, but when you look at these journalists, hang on, when you look at these journalists doing their reporting, you say, all right, where are your questions about that? Where's your discussion of that? You know what I mean?
Context now, the Dow has been up. The Dow's actually was up more under Obama than it is under Trump. Now, I know that's it's somewhat of an unfair comparison.
Well, the bull market started in March 2009.
And tons of QE, right? Okay, so but
sure,
remember,
a lot of quantitative.
Remember, for journalists just to ignore, listen, this is kind of a big story. I don't think it's the biggest story in the world.
I fully agree.
But the stuff with Bannon and all that.
But it's not either or, Charles. That's all I'm saying.
I agree.
It's not either or.
Wait a second.
When the inevitable correction comes, though, Trump will get the blame for that in the media.
But by the way, he also, I think kind of to Lizzie's point, he steps on that because he's married himself to these markets, which is fine when they're going your way.
Good point.
But you're going to be married to when they go the other way, as they will.
How many White House press conferences under Obama did you watch the media ask questions about the economy and growth and the markets? A lot. The media did ask it. They asked 0 yesterday about that.
Now, to be fair, we were coming out of a meltdown, and everyone was fixated on 700,000+ jobs lost on a monthly basis, right? So
right, and
understood. And then Obama created a net 10 million jobs. Clinton and Reagan created more.
And
all those presidents,
kudos to anyone,
right? But all those presidents inherit recessions, right? No, and Obama did too. So did Clinton and Reagan.
I remember distinctly. I'm not quibbling. I agree.
You at CNBC back then?
Yes.
Those are the good old days.
Yeah, I love it. Right? when I used to move the markets 500 points a day during the financial crisis. But I agree with your overall premise, but you have to remember when the media covered Obama, a lot of reporters, myself included, were very focused on the lack of job growth, the U6 number being astronomically high. So he did. So when the economy,
but he got a far more friendly press than this president. I think that's.
He's got better, but he still got his feet held to the fire on the slow recovery. I mean, that's why the Republicans won in 2010.
Well, this president has been uncharacteristically antagonistic with the press, so that's part of the story, too.
He creates his own base.
Yeah. Well, he does, but I think that, he doesn't get enough credit, and we don't realize what's going on in the economy.
I think we can cover all of this, right?
What's that?
We can cover all of this. It's all fair game.
It's all fair game.
Okay.
But I think that what people don't realize, this is not, he's his own worst enemy.
I've got a producer who's younger than millennials saying, get out, we're out of time.
I think he acts like a millennial sometimes.
He does.
Doesn't he?
He's really just annoying.